Welcome back to the deep dive. So if you've been following the tech market lately, the noise is just, well, it's deafening.
It really is.
Google just unveiled its staggering Gemini 3.0 Pro model, and it runs on their new custom tensor processing units, their TPUs.
And the immediate narrative was pretty clear.
Oh, totally. For so many observers, this spelled doom for the incumbent. The story was GPUs are obsolete and NVIDIA's reign is finally facing a real challenge.
That narrative, the classic tech titan versus the nimble integrated challenger, it just makes for great headlines. It's a very satisfying story for the market to chew on.
But our source material today pulls a complete structural switcheroo. It presents this counterintuitive argument that Google's success isn't a threat to NVIDIA at all.
Okay.
In fact, it argues that Google's advancements are a massive, even a necessary boon for the GPU giant. So let's unpack this because it runs completely contrary to the market consensus.
And that, right there, is our cue to approach this with some pretty extreme skepticism. When a source provides a narrative that is this convenient for the market leader,
Right.
we need to move beyond just repeating their conclusions. We have to scrutinize the metrics they're using and really challenge why they prioritize certain evidence.
Or what they might be conveniently overlooking.
Exactly.
And that's our mission for this deep dive. We're going into the economic and technical arguments that suggest GPU superiority persists despite all the TPU hype.
But keeping a very critical distance from the source's final, almost celebratory conclusion.
So let's start with the economic fuel for this whole argument, the scaling law.
Right, the foundation of it all.
Precisely. The core claim starts right here. Google's continued, just jaw-dropping progress with their large language models proves that the scaling law is still fundamentally valid.
Meaning just pouring more compute resources into training these huge models.
Yields demonstrably better AI performance. It just works.
Okay, so that's a critical technical validation for the whole industry. But how does that validation for Google magically translate into revenue for NVIDIA, their biggest competitor in chips?
Because, and according to our source, this validation is NVIDIA's best news. Once Google proves that scaling works, every single competing tech giant, we're talking Microsoft, Amazon, Meta, OpenAI, Anthropic,
All of them
must immediately double down on compute investment just to try and close that gap. It becomes an existential arms race built on compute.
The implication being you want to compete, you have to buy hardware, and you have to buy it now.
Yes, but hold on. The source claims these trillion-dollar competitors, they lack Google's decade-plus head start in vertical integration.
In building their own silicon.
Exactly. And that's the structural advantage. Since they can't just instantly spin up a custom TPU factory, they have only one rapid path to expanding their capabilities, NVIDIA's GPU. The source frames the GPU as the universal channel for compute expansion. As long as the market believes scale gives you an edge, NVIDIA sells the shovels.
I have to challenge the inevitability of this right away.
Okay.
Does the source oversimplify the competitive strategy here? I mean, it suggests a bit of a logical fallacy. Because the scaling law works, the only solution must be buying GPUs.
You think that's too simple?
It ignores the massive resources those competitors are dedicating right now to building their own internal TPU-like capacity. They're not just sitting still.
But the source would argue that those custom chip projects, they're years behind Google's maturity curve. To catch up now, you need speed, not just promises.
And the GPU offers that off-the-shelf speed.
It offers that immediate scaling. It's the only way, they say, to avoid being permanently outpaced.
That might be true for the immediate urgency of it all, but we have to acknowledge the strategic liability here.
What's that?
You're betting the future of your AI business, your entire enterprise, on a single universal vendor like NVIDIA. That introduces huge supply chain risk, vendor lock-in.
So they have no choice today.
Accepting that premise that they have no choice today is ignoring the really serious strategic consequences down the line. That decision has hidden costs.
Well, that tension speed versus independence is clearly what's driving the market. But let's move into the technical argument, because this is where the source tries to execute a mathematical reversal on efficiency that changes the whole conversation.
Okay, this is the critical part. I suspect they're about to move away from the easily measurable theoretical metrics.
You are exactly right. The source claims that outside observers are totally misjudging efficiency. They're focusing on simple, single-chip metrics like TFLOPS per watt.
The theoretical throughput.
Theoretical, yes. But the real metric, according to this analysis, is production efficiency. So we're talking about tokens produced per unit of electricity.
A shift from measuring capability to measuring actual business output.
That's it. So to set the stage, let's define our players. On the NVIDIA side, we are looking at the new GB200. That's their newest superchip system.
And on Google's side,
we're looking at the TPU V6E, which is optimized for inference.
Okay.
Now, if we compare these at the standard FP16 precision, the TPU looks way more efficient. The TPU V6E gets about 2.64 TFLOPS per watt.
Which is pretty good.
It's significantly better than the GB200's 1.85 TFLOPS per watt. So your initial conclusion is TPU is 42% more power efficient.
A clear victory for the specialist TPU, at least on paper. So where's the reversal?
This is where it gets really interesting. The source argues this comparison is totally misleading because it ignores the accelerating industry shift toward ultra-low precision for AI inference.
You mean how many data points you need to calculate a result?
Exactly. Why does precision matter? Imagine FP16 or 16-bit floating point. It's like writing a math equation using full dollars and cents.
Okay.
As models get better, we can sacrifice a little bit accuracy, moving down to FP8 or even FT4.
Which is like using quarters or nickels.
Right. You lose a tiny fraction of precision, but the hardware can process way more calculations or tokens for the same amount of electricity.
So we're talking about quantization, compressing the model's data. And that sounds like software, but it's hardware dependent.
It absolutely is. NVIDIA's latest architecture, specifically the GB200, supports FP4 precision. TPUs, on the other hand, currently only optimize down to FP8 or INT8.
And that's the gap.
That is the gap that allows the source to state new math. Because of the GB200's superior low-precision capabilities, the GPU system can produce about 40% more tokens at the same power consumption.
When optimized for FP4 versus the TPU system.
Exactly, and that's the reversal. The theoretical efficiency is gone, replaced by real-world token output.
I have to interject here and question the stability of that 40% claim.
Go ahead.
This advantage is entirely predicated on a temporary hardware gap. If Google's next TPU closes that FP4 support gap, which seems highly likely given the pressure,
then the whole calculation is different.
It evaporates instantly. This comparison feels narrowly optimized to highlight the GPU's advantage right now, not some long-term structural superiority.
Well, the source's counter to that is that the AI factory needs to be running today, which brings us to the data center level, where GPU density becomes this massive economic factor for cloud providers.
Right, they're dealing with expensive land, rent, cooling.
This is where the rubber meets the road. It's not about the chip, it's about the rack.
Okay, so let's hear the thought experiment.
Okay, they run a data center scenario based on filling 100 racks. If you switch from a TPU setup to the high-density NVIDIA GB200 setup, you need about 4 times the total power.
4 times the power. I mean, that is an enormous operational expense, a huge OpEx hit.
It is. But wait for the output. At FP16 precision, that 4x power gives you 3x the token output, so still inefficient.
Right.
However, when you leverage that low-precision FP4 on the GB200, the token output jumps to 6 times the capacity of the TPU center.
While the power usage stays at that initial 4x level.
It stays at 4x. So that 4 to 6 ratio is absolutely critical. You're consuming 4 times the power to generate 6 times the tokens.
Which shifts the whole discussion from raw power efficiency to output density per square foot.
Exactly. The bottom line the source presents is that the GPU-filled data center produces about 50% more tokens per unit of power compared to the TPU center.
And that ties directly to profit.
Directly to profitability. Token selling AI inference time are a positive gross margin business.
Right.
So consuming 4x the power to generate 6x the tokens means way more total revenue and, crucially, higher marginal profit.
So their conclusion is that the GPU setup is the better investment.
They say it's the higher return investment portfolio because of the sheer density and output.
I have to say, this analysis feels incomplete. It's glossing over some massive economic factors.
Like what?
Let's ground this for you. The source is saying, spend $4 on electricity to make $6 in tokens. That sounds fantastic.
It does.
But they're ignoring the massive upfront capital expenditure, the CapEx required to buy, install, and cool that dense GPU infrastructure. You have to pay a massive entry ticket before that revenue engine even starts.
The source views that CapEx as a necessary cost for dominance, a required investment to get that 50% output advantage.
But if you're the CFO at a competitor, that choice is agonizing. Are you prioritizing a high output, high profit stream next quarter that requires this immense upfront spending?
Yeah.
Or are you prioritizing a lower total cost of ownership 5 years from now? The source just assumes everyone can afford the immediate high capex buy-in to the NVIDIA ecosystem.
And you think that's a stretch?
I also think we can't assume all AI inference yields these strong positive gross margins. This high return scenario might only apply to specific massive workloads. It limits the general applicability of their conclusion.
That's the core tension, isn't it? Speed versus
Yep.
cost of entry. Let's move to the final argument, which is all about the ecosystem, because this is often cited as NVIDIA's unassailable advantage.
The famous CUA moat.
That's the one. The argument shifts away from price. The GPU's single unit price might be higher, but the cost per token is competitive when you factor in output density.
But the real value is the software.
The true enduring value is the GPU's universal nature and its indispensable software ecosystem. CUEO, TensorRT, the whole developer toolchain. It's the infrastructure layer for the entire industry.
It's not just a chip, it's a way of working.
Exactly. The source contrasts the two. TPU is a closed system, hyper-optimized for Google's internal workflow.
While the GPU is the open platform.
It's the open, scalable platform for all the other major cloud suppliers and model companies, your OpenAIs and Anthropics. This scalability and universality is what makes its value so enduring.
And while the marketing for universality is really strong, we have to recognize that a closed, vertically integrated system like TPU is arguably superior for a company that controls the entire stack.
From silicon to the app layer.
Right. They eliminate all that compatibility friction. The source is basically arguing that platform openness is inherently better than specialized efficiency.
But the source would emphasize the sheer volume of developers, the legacy investment in the CUDA framework.
The time and money already spent.
And the time required to build an equivalent ecosystem is just an insurmountable hurdle. We're talking about billions of lines of code and decades of optimization.
And that is a powerful point. The time and cost for competitors, Microsoft, Meta, Amazon, to move off the CUDA framework and onto their own AI frameworks is immense.
It's a huge lift.
It forces them to keep buying GPUs in the short to medium term, just because the risk of rebuilding their software stack outweighs the immediate cost savings of using another chip,
So the GPU becomes a strategic necessity.
not just a technical preference.
So synthesizing everything we've unpacked here, Google's advancements, far from creating a crisis for NVIDIA, actually act as a strong market tonic.
Right, they trigger the next necessary wave of compute investment, all based on the proven effectiveness of scaling.
Google basically forces the competition to commit to immense immediate spending.
And that spending has to flow through the universal channel, which is NVIDIA's hardware. It's a remarkable piece of market jiu-jitsu.
It turns a competitor's success into a structural benefit for the incumbent.
My final critical synthesis on this is that the competition in AI is ultimately not about whose chip has the highest theoretical TFLOPS per watt. It's about who can most efficiently and immediately expand capacity to capitalize on that scaling law.
And right now, NVIDIA holds that key.
They do. But here's the provocative thought for you to mull over. Given that NVIDIA is positioned as the sole universal provider for instant scaling, does this reliance on one vendor introduce a new hidden economic risk? A single point of failure or leverage that will eventually force those competing tech giants to build their own systems, and in doing so, undermine the GPU's longevity in the long run. That right there is the hidden cost of universality.